This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
President Joe Biden's administration will sell nearly 1 million barrels of gasoline in the U.S. managed stockpile in northeastern states as required by law, the Department of Energy said on Tuesday, effectively closing the near-decade-old reserve. The department created the Northeast Gasoline Supply Reserve in 2014 after Superstorm Sandy left motorists scrambling for fuel. But storing refined fuel is costlier than storing crude oil, so closing the reserve was included in U.S. funding legislation signed in March by Biden, a Democrat. Bids are due on May 28 and the Treasury Department's general funds gets proceeds from the sale, the department said.
Oil prices fell for a third straight session on Wednesday on expectations the Federal Reserve might keep U.S. interest rates higher for longer due to sustained inflation, potentially impacting fuel use in the world's largest oil consumer. Brent crude futures were down 60 cents, or 0.7%, to $82.28 a barrel, while U.S. West Texas Intermediate crude futures slipped 64 cents, or 0.8%, to $78.02 as of 0346 GMT on Wednesday. Oil prices settled about 1% lower on Tuesday.
Moving on to the top news in the energy sector.
Rising sea levels could severely disrupt crude oil shipments and erode energy security in import-dependent countries like China, South Korea and Japan, with many of the world's biggest terminals vulnerable to flooding, researchers said on Tuesday. Melting ice and swelling seas caused by rising temperatures could unleash unstoppable multi-meter sea level rise, which will not only sink key oil ports and disrupt global oil trade but also swamp coastal refineries and petrochemical facilities, the China Water Risk think tank warned in a report. A 2021 report by the Intergovernmental Panel on Climate Change estimated that on current trends, average sea levels could rise by more than a meter by the end of the century, adding that a 2-meter rise could not be ruled out.
China's breakneck build-out of solar power, fueled by rock-bottom equipment prices and policy support, is slowing as grid bottlenecks pile up, market reforms increase uncertainty for generators, and the best rooftop space runs short. Last year, China expanded its solar fleet by 55%. The momentum continued through the first 2 months of 2024, but in March new solar build fell 32% year-on-year to the lowest level in 16 months, official data and Reuters calculations show. The country's solar power expansion is slowing due to tighter curbs on supplying excess power from rooftop solar into the grid and changes in electricity pricing that are denting the economics of new solar projects. Next, we have the top news in metal markets. Iron ore futures hit an over 3-month high on Wednesday as investors bet on better demand following China's property support, despite ample stocks in the world's top consumer. The most traded September iron ore contract on China's Dalian Commodity Exchange was up 2.5% to 919 yuan, $126.95, a metric ton by 0504 GMT. Its highest since February 20th. The contract has gained for 5 consecutive sessions. The benchmark June iron ore on the Singapore Exchange rose 0.8% to $121.80 a ton.
Gold prices inched down but hovered above key $2,400 level on Wednesday, while investors await minutes from the Federal Reserve's latest policy meeting for fresh signals on the timing of U.S. interest rate cuts. Spot gold was 0.3% lower at $2,413.50 per ounce, as of 0543 GMT. Bullion hit a record high of $2,449.89 on Monday. U.S. gold futures were down 0.4% at $2,416.80. One of the factors supporting gold is fiat currency debasement undertaken by the U.S. and the developed nations due to the rising budget deficits, said Kelvin Wong, a senior market analyst for Asia-Pacific at Oanda.
We will now look at the top news in the agricultural sector.
Chinese importers are believed to have purchased at least 2 shipments of soybeans from the United States in the past few days, grain traders in Europe and the U.S. told Reuters on Tuesday. One European trader said 2 shipments each of about 65,000 metric tons were bought for July shipment. A second European trader said 2 consignments were bought on Monday, also for July shipment from the US Pacific Northwest coast, with the buyer believed to be a Chinese state organization purchasing for reserves.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.